Saturday, October 7th, 2017, Monaco 64, home of alternative economics and contrarian views. So I want to look at the dollar index, the long-term picture, and show the viewers how the dollar index is actually behaving like a supertanker. And that analogy refers to any big system or big economy, when you need to change the system, the economy, or the currency for that matter, when it turns around, it takes a bit of time. It's much easier to tack, a boat, a small dinghy, than to tack a huge supertanker to change direction. And we'll look at the charts and see how the dollar index is definitely turning south. And I'll also put a link to a video I did in July. And it's entitled Long-Term Dollar Top Pointing to Massive Bull Market in Gold and Silver. And I talk about a roughly 7-year cycle in the dollar index. If you go back to 1985, 1992, 2001, 2008, and now 2017, and I highly recommend you view this video. I'll put it up above in the cards as well. So the other thing I like to just say, more in the short term, about gold and silver, because of course gold and silver are the other side of the dollar. When gold and silver are strong, the dollar is weak. And yesterday we had the non-farm payroll numbers. They were weaker than expected. Non-farm payrolls down 33,000, mainly affected by the hurricanes, according to mainstream economists and mainstream financial news. And in spite of that, gold and silver got hit fairly hard. Gold actually was trading around 1268 before the number, and we traded down to 1260-61 area. And silver as well traded down to a low of 1630. But then, unlike the other days this week, the gold and silver price actually rallied really strongly towards the close of the U.S. markets, and that was very positive. Look at the short-term silver chart here, how we had an outside day, silver closing at 1680, above the previous day's high at 1671. So very encouraging close. Gold as well traded down to 1261 and closed at 1276. Just above that 1275 support. So encouraging short-term closes for gold, and I expect next week for precious metals to continue higher. But let's now look at the dollar index and the long-term picture here, and to show you, how this turn in the market, or this supertanker, is really turning south. And I've got a chart here going back to the early 80s. You can see the top there around 1985, the bottom in 1992, the top in 2001, the bottom 2008. And I think now the top at the end of last year, beginning of this year, 2017, is the end of the upcycle from 2008. So, roughly 7 years. It's actually more than 7 years, 8 years and 10 months. But on average, the cycles are just over 7 years. Sometimes they're shorter than 7 years. Sometimes they're longer than 8 years. And the moving averages, they're weekly moving averages. The black line is the 50-week moving average. The orange is the 100. And the green is the 200-week. And as you notice, like when the dollar is in a bull market, the 50-week is above the 100, and the 100 is above the 200. And we had that until, we still have that at the moment. But as you can see there, that black line is trying to cross back below the 100-day, the 100 week, and the 200 week is still quite far away. But one thing I like to note, if you look at the chart back in the early 2000s, when the dollar started going down, you can see it doesn't go down in a straight line. We had like a big first leg down, and then the market bounced back up to like 110, but then it just came back, continued to go down, up until 2008. And I think that's what we're seeing right now. We've seen a big first leg here, broke key support around 91. And in the last few weeks, we've actually been correcting back up. But all it is a correction in a bear market, in my opinion. So that's the longer term picture for the dollar index. So now I'll bring the long-term gold picture. And as you can see, the bull market from 2000, 2001, the 50-week, always above the 100 and 200 week. It was only later on, after 2013, that, the correction that we've had since 2011 has been confirmed. And as you can see, the 200 week has been above the 100 week and the 50 week. We've had the reverse, and that's why we've gone down. But if you look now at a shorter term chart, which I'll bring up. Well, actually, before I bring the shorter term chart, you can see that trend line from the high in 2011 we're still above that, even though we've had this fairly big correction in the last month in gold. So let's bring the short-term chart of gold. It shows you how now the 50-week moving average is above the 100-week, which is the yellow line, and even the 100-week now is above the green. And you can see it's taken a long time. It's taken, 5-6 years for this, relationship between the moving averages to turn. So that's why I use the analogy as well of a supertanker. It takes time for these. It doesn't happen overnight, and it's actually quite positive. And we should see the 50-week moving average now outperform the longer week moving averages now and get distance from them. But it looks pretty good now. 50, and the fact that the 100 has gone above the 200 as well in gold. And now let's look at the silver situation. You saw the short-term silver chart, which I showed you. Now the longer-term silver chart. The 50-week is still below the 200-week here, but it is above the 100-week, which is positive. We saw earlier this year the 50-week did get back above, the 200-week, but the 100-week was still way too far. And now it all seems to be converging here, and it looks quite positive, that we're going to probably see now the 50-week move back above the 200-week, and also see the 100-week move back above the 200-week. So I know it's been frustrating for precious metals holders, especially with what's going on in the crypto space, seeing all the cryptocurrencies surging ahead. But this just goes to show that precious metals are very important, that they are the anti-dollar, and the dollar is turning. It has taken a long time to turn. These things take time. I think a lot of the reason why is that there's a lot of management of the currencies between the big central banks, especially the Fed, the ECB, the Bank of England, and the Bank of Japan especially. If you look back at the chart, longer-term chart of the dollar index, back in 1985, there wasn't as much, central bankers didn't work as well as they do now together. So that correction in the dollar was a lot sharper, but now it seems to be more controlled. The other thing I like to point out about this longer term chart in the dollar index, you can see there the top that we made in 2001. There was like a triple top there, very similar to the top we've seen now since 2015. It's like a triple top. I know the top we've had above 103 went past those previous tops around 100, but it looks pretty much very similar to that top we had from 2001 to roughly 2002. So yeah, that's what I wanted to talk about, the technical picture for the dollar index and precious metals. No fundamentals today, just the technicals. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. And I'd like to thank all the people who've made donations to the channel. You know, as I said, if you think I add value, please make a small donation if possible. The links and details are in the description below. And you also can follow me on Steemit and on Twitter. And I'll talk to you later. Bye.